think last we had done analytical procedures, and I think we had done one standard on auditing 501, if I'm not wrong. Yeah, Hari, whatever screenshot you want of 501, you just tell me towards the end. I'll give it to you. SA 501 notes. Yeah, I'll do that. There were notes of SA 501. Yeah, there were so many. Yeah. Anyways, see. Now, basically, what we have to start off with is chapter number 9, which is on audit of items of financial statements. Previously, this chapter was known by the name vouching and verification. Some people definitely can't find vouching and verification, but chapter 9, though, you can find, no? Huh. Don't worry, that notes we'll see later. Yeah. Why are you so bothered about that 501 notes? Yeah. Let me tell why. Because you want to spend the 10 minutes doing nothing but just copying. I was also a student. Yeah. I know how it feels. Yeah. Chill, Madi. Hey, this Sunday there is a lecture. Y'all have? Even y'all have. Hey, what's wrong with it? Yeah. Previously they gave holiday, no? Alright. Then now why they are giving lecture? Hey, this is like you're taking vaccine and then you again get COVID, it seems. It is like that only, you know. First you are giving the, I mean, yeah, it is reverse. What, yeah. Hey, no, yeah, why will I tell ya not to give holiday? Even I wanted that Sunday, yeah. Even I have lecture this time. Although I have of 3 hours only, but then still I have, yeah. Sunday should be, yeah. I know, sapna toot gaya, it seems, yeah. Sad, yeah. I know. Looking at that Sunday lecture, I was like, is it sure? Is it sure? Then I just zoomed it and said, oh, yes, it's a Sunday, it seems. Yeah, sometimes, you know, you people don't believe what your eye sees. Like ultimately, when you write the paper and the examiner looks at the paper, he does not believe what his eyes is seeing. He is wondering, oh my God, is that a paper? It seems something like that. I'm just giving example, yeah. No, okay. No, listen, no, listen. When you talk about audit of items of financial statements, we're going to start the chapter today. We are going to end the chapter today. We have a lot of writing also to do. So ultimately, that's the good part, because that is probably that you look after. Rather than your brain getting nothing but hammered, it is your hand, which is always better to get hammered. So ultimately, I'm not going to damage your brain much because it is already so much. So what? Matlab, I'm not going to, array, not like, array? Acha. Some people are like, acha. So yeah, so basically we have to do a lot of writing. It starts today, it ends today. Don't do it from the textbook, because in textbook they have given you a very basically exhaustive thing which is not required for the examination. So we are going to do it in a concise version which is absolutely perfect for examination with all the concepts whatever are there. Now listen, when you talk about vouching and verification, now previously we have done this vouching and verification somewhere. I'll tell you where. We had done audit procedures, if you remember. There are two types of audit procedures: risk assessment procedures, which we saw in chapter number 4. Then, acha, you want me to have the chart? Wait, I'll have. No, because some people, they have that in the mind, but then they have many other things in the mind which is stopping them. Why your mind is so occupied, yeah? See, this is what I was talking about, this part. Audit procedures. So ultimately, I hope as risk assessment procedures, further or other audit. Why is this Jamuna, somebody raising hand here? What do you want here, Jamuna? Huh? Come on here, you flow, no, Jamuna. Let us do our work. It was nice, yeah. You're so rude, yeah. It was nice, yeah. You don't have any creativity. Rude, yeah, you. So ultimately, audit procedures, risk assessment procedures, and further and other audit procedures. Okay. As far as your further and other audit procedures concerned, two: compliance and substantive. Compliance is test of controls. Control is something which you can't. So basically, that is ICS. Okay. On the other hand, substantive is two things: test of details and analytical. Analytical, we have already seen. Compliance, test of controls, ICS, we have already seen. Risk assessment, we have already seen. Test of details, see further, vouching and verification. Vouching ultimately checking P&L, verification checking balance sheet. I had told you what is vouching, what is verification. I'll tell you later. That later is now. But that is the only thing that you remember. Huh. Rude. Now listen. So now we have to learn what is vouching and what is verification. Don't write, yeah. Acha, you want to write? Okay, give the heading. Come on, do something. Yeah, write down. Be of some use. उससे अच्छा तो मेरा वाला था, that बहती रहे it seems. Oh, many people from the evening also have come. Hello, hi. What's up? Rude people. Huh. Before this, you had tax only. Yeah. Where is my scale? Yeah. Okay, bus. Once you give the heading, you just have to pay attention. That's it. Now listen. Oi. Oh, bapre. Yeah, now you will realize what will happen. Listen. Now don't write anything, huh? Stop writing because now that is not to be written first. But still I have to explain that first. Why? Because I know how to. So relax. Huh. Now, can I say obviously vouching and verification, there is a difference. Think and answer. Okay. Too much big. Sometimes you don't require that big. So wait. Yeah, this much is fine. Now, think and answer. Vouching is taking which items? Balance sheet or P&L? Vouching is taking P&L items. P&L items, incomes, expenses. Come on, use your whatever is working and tell no. Nothing, no? Okay, I'll use my brain and tell. If vouching is P&L, verification is balance sheet item. Balance sheet item, asset and liability. Anybody has a doubt? Thanks for coming. Acha, now use your common sense here. If vouching is taking P&L items, it is taking of balances or it is taking of transactions? Transactions. Ah. So can I say vouching is taking of transactions? What about verification? It will be checking of transactions or balances? Correct. So can I say verification is checking of balances? Acha, use common sense. Transactions will happen at the end of the year or throughout the year? Throughout the year. So vouching also will happen at the end of the year or it can be done throughout the year. So can I say vouching can be done throughout the year? Achha. What about the verification? You have to check balances, no? You'll check balances every day, like you check in your prepaid balance how much it is. So ultimately, can I say what you will have to do? Correct. It's balance sheet. So you will have to check throughout the year or at the end of the year. So verification is done at the end of the year. Now, let us take verification example. Okay, listen. Say for a simple example, you are checking the balance sheet. What are you checking? Balance sheet. In that, say you are checking fixed assets. Okay, and say you are checking stock, for example. Now, use your eyes, and tell. Will you people ultimately only check the fixed asset and the stock in the balance sheet? Will you only check that in the balance sheet? No. Can I say you'll have to check in reality whether it is there or not? It means just checking the balance sheet is enough or not enough? Not enough. So can I say checking documentary? Not enough. You will have to conduct physical verification, but only where it is possible. It will not be possible everywhere. No, yeah. I give you example also. If you remember stock, I hope as if at all it is located at a go down where ultimately it's a containment zone, you will not go. So then you will do PAP. You will get nothing but written representation. Similarly, I hope as if there is a debtor, you will physically verify debtor. No, then use common sense. Can I say basically, Arey, what has happened to your brain? Yeah. How can you physically verify data? Yeah. So ultimately, possible, not possible. Not possible. No, yeah. That's why I told physical verification only where it is possible. Well, exactly. Acha. On the other hand, now let us talk about PNL. Okay, please come there. Enough of verifying. Now, supposing, say in the PNL, say there is printing and stationery. Assume, say 15,000 rupees. Assume. My simple question. Obviously, in the PNL, you will see printing and stationery. My simple question. Is that checking enough? Are you going to do physical verification of printing and stationery? Whether the pen is there or not, whether the diary is there or not, whether the folds are there or not, or Rahul has taken away. No. So ultimately their physical verification you will check or no? No. But something you will have to check. What? Correct. Supporting document. Can I say there has to be the bill of the printing and stationery? Come on, yeah. But use your common sense. Bill is also document only, no? So ultimately, can I say PNL is also document, bill is also document. So eventually, when you are doing vouching, can I say documentary evidence is enough? But I hope realize in verification, it is not enough. Verification, it also requires physical verification. All cool? All cool. Okay, next, think and answer. Can vouching be done by junior staff? Can vouching be done by junior staff of the team? Yes. In fact, vouching is done by junior staff only. For a simple example, you, assistants. Correct. Articles. Ultimately, when you people will start your articleship, one thing is sure, whether you do anything else or not, vouching you will do. Because I hope it is very monotonous. It is very boring. But that is how the assistants are brought up. So ultimately, they are not doubting you that they give you vouching. They know you, hence they give you vouching. Huh. So ultimately, can I say, basically, assistants are given vouching. So it is done by junior staff. Huh. So vouching is conducted by the junior staff. What about verification? Should it be done by junior staff? No. Then it is done by senior staff. Hey, what do you mean by senior staff? Grandparents? No, Ray. Experienced. Or you can say auditor himself. All cool? And the last one. Think and answer. Supposing you are checking balance sheet. Assume. Say fixed assets, stock, blah, 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 blah. Will you people check the valuation? Obviously. Acha, it should be overvalued. No. Oh, sorry. It should be undervalued. No. It should be properly valued. Yeah. So can I say verification includes valuation? Use your common sense. Are you going to do valuation of incomes expenses? No. There you to check accuracy, no? Whether it is accurately written or not. So does it include valuation? No. Therefore, it excludes valuation. Come on, yeah. All cool? Come on, answer one by one. Vouching is checking of transactions. Verification is checking the balances. Vouching is checking P&L items. That is incomes and expenses. Verification is checking balance sheet items. That is assets and liabilities. Vouching is conducted throughout the year. Verification at the end of the year. Thereafter, vouching, documentary evidence is enough. Verification, not enough. Physical verification also required, but only where it is possible, because everywhere it is not possible. Thereafter, it is conducted by junior staff. Verification by senior staff or auditor himself. Vouching excludes valuation and verification includes valuation. All cool? All cool. Now, having at least learned vouching and verification, this entire chapter, which is audit of items of financial statements. What do you mean by financial statements basically? Can I say P&L balance sheet? Some measures are cash flow statement also. Cash flow statement is a derivative of P&L balance sheet only. Even I have made cash flow statement. Okay. So ultimately, can I say it comes from P&L balance sheet? P&L is basically incomes, expenses, balance sheet, assets, and liabilities. Now, when I say items of financial statement, what are items in P&L? Incomes, expenses. What are items in balance sheet? Assets. So in this chapter, what do we have to learn? How to audit incomes, expense, how to audit asset, liability. That's it. All cool? Now, no, you don't have to copy. Relax, no, yeah. Relax. Now what we have to learn is one important concept of assertions. I don't know how many of you remember. Previously, now we had done SA file 20, analytical procedures, chapter 8. In that, assertions had come. If you remember, now I had given you one key, Pandi. You remember? It was nice, yeah. You are rude, yeah. If you don't want to remember Pandi, now you can remember PAN ID, PAN card ID. Like that also you can remember if you want. That is a bit logical also. But then look at me. Where I and logic go hand in hand. You don't know how I am. You don't have to second the point. That's rude. You have to tell, no, sir, it is not like that. Huh? What you are telling? Yeah. You are like that only. Rude, yeah, you are. Huh? Pandy is nice, huh? I know. Now listen. So ultimately in that Pandy, N was there. Nature of assertion. In that nature of assertion, if you remember, I had given you P&L, balance sheet, Now, in detail, we have to learn, which I told you I'll do it later. That later is now. See, every later will come. The problem is you don't know which later is there. So that later, I will keep on telling. Don't worry. The only thing which you know to tell is now. So relax. Okay. Now listen. What do you mean by assertions? Firstly, the meaning. It is conclusions. What? Conclusions. Who is making conclusions? Auditor. On representation of management. Now, what do you mean by this? Very simple, yeah. Who presents the balance sheet P&L? Management. So management have represented that, no? I have not made it. It is presented to me, P&L balance sheet. I to have to conclude, no, on P&L balance sheet, whether true and fair is there or not. Those conclusions which I make are known as assertions. So what is assertions? Conclusions made by the auditor on the representation made by the management. All cool? Okay. Now there are two types of conclusions which we need to know. Listen. One, conclusion about classes of transactions and events for the year under audit. And secondly, assertions about account balances at the period end. Now you'll have to use your, see, and tell me, when you say assertions about classes of transactions and events for the period, I am talking about which assertions? P&L. How? Array, P&L account is made for the year. Balance sheet is made at the end of the year. So when I say assertions for the year, so can I say these are P&L items? Come on, yeah. Acha. Now see, B is assertions about account balances at the period end. Period end? Balance sheet assertions. Not bad, yeah. How come? Answers and all, till you're all okay? So can I say we have to learn two assertions? Which two assertions? One, correct, P&L. B, balance sheet. In exams, they ask you assertions independently. It is one of the very important concepts that we have in auditing. Okay. Your entire chapter 9 is based on this concept only. If you know this concept, you will know chapter 9. If you don't know this, still I'll ensure you know chapter 9. But yeah, you have to know this. Okay. Now, when I say P&L assertions, balance sheet assertions, two things. One by one we'll go. Now see, first is assertions about classes of transactions and events for the period under audit. So these are your P&L assertions. Now what all I have to conclude? Okay. One by one we will learn. Firstly, occurrence. Now what do you mean by that? So simple. Can I say whatever the transaction is recorded in the P&L that should have occurred of that year, no? It should be occurrence of that year, no? Should it be of the prior period? No. Should it be of the next period? No. It should have occurred in the relevant period. Relevant period means period of audit. All cool? So that is what I will have to conclude for P&L first. Whether the transaction which has been recorded has occurred in the relevant period or not. Next, completeness. What do you mean by completeness? Any transaction which occurs have to be recorded, no? Should it be omitted? No. So auditor will have to conclude what should have been recorded, whether that has actually been recorded. Because if it is not recorded, you are omitting. And if you are omitting, it is not proper. All cool? Okay. Next, cutoff. What do you mean by cutoff? Listen carefully. The transaction whichever occurs should be recorded in the correct accounting period, no? Supposing if it is a transaction of this year, it should be recorded in this year. If it is a transaction of the prior period, it should have gone in prior period. You don't have to record it here. So can I say when a transaction occurs, it should be recorded in the correct accounting period. That is the meaning of cutoff. Recording in the correct accounting period. All cool? Okay. Next, classification. Whatever is the transaction that should be classified and written in proper accounts. For a simple example, obviously there has to be proper classification between capital and revenue. And ultimately, I hope as when you are talking about P&L, it should be only revenue because capital will go in balance sheet. Now, when I say here P&L, supposing there is any credit purchases, then can I say it should go to nothing but creditors account? If it is credit sales, it should go to the debtors account. So firstly, there has to be proper classification between capital and revenue, and you should record that in the proper accounts. Okay. Next, Accuracy, so simple. Whether the transaction which is recorded at correct amount. Supposing if I tell you there is an expense of 630, then it should be 630, no? It should not be 360. Because if it is 360, it is inaccurate. So auditor will have to check whether it is accurate or not. This though we had done in principal aspects also. Arithmetical accuracy. Achha. And last one, presentation and disclosure. So simple. All the transactions whichever are happening, and if they require any presentation and disclosure, whether they are presented and disclosed or not. Just to give you a simple example. Accounting standard, say 13 on investments. Can I say accounting standard 13 requires any profit or loss on investments have to be disclosed separately in the P&L? So can I say you'll have to make a separate disclosure? That is the requirement of FRF. One more example. Any profit or loss on sale of fixed asset should be disclosed separately as per AS10. Achha. Any borrowing cost which is capitalized or any borrowing cost which is charged to the P&L should be disclosed separately. Then use common sense. Can I say that has to be disclosed as per FRF? So that is nothing but presentation and disclosure, whether it has been properly presented and disclosed. All cool? Wait, what all are there in P&L? Can I say occurrence? What do you mean by occurrence? Transaction has occurred, which is recorded as occurred in the relevant period or not. Achha. Thereafter, completeness. What do you mean by completeness? The transaction which should have been recorded, whether it has been actually recorded or not. Thereafter, cutoff. What do you mean by cutoff? The transaction is recorded in the correct accounting period or not. That accounting period recording. Okay. Next, classification. Remember like this, 3 C's together. Whether it has been properly classified as revenue or not. Next, accuracy. Whether ultimately it has been recorded at the correct amount or not. And lastly, presentation and disclosure. Whether whatever has to be presented and disclosed as per FRF, whether it is presented and disclosed or not. Come on, yaar, manageable? Okay. Now, coming to balance sheet. The first which is there in the balance sheet is existence. Now, what does the auditor have to conclude? Whatever is appearing in the balance sheet should be there in reality, no? So ultimately, he will have to check the existence. How will he check, Baba? Physical verification, wherever possible. Wherever not possible, he will do PAP. But wherever possible, he will have to conduct physical verification. After existence, he will have to check completeness again. Now, what do you mean by completeness? Array, what asset and liability should have been recorded? Should be recorded, no? Because if it is not recorded, it is incomplete balance sheet, just like your P&L. Okay. Next, rights and obligations. You have heard this before also from me in that same Panda Pandey answer. Now, when I say rights and obligation, you know what is a right? Asset is a right. Liability is an obligation. Now, what do you mean by that? Listen, supposing ultimately whatever asset I have, I own the asset. If I own the asset, I have a right over the asset. No? If I want, I can sell it.